Hello and welcome back to my YouTube channel. My name is Anu Joshi, and on the channel today we have Charlene Ward, who is a mortgage agent with the Bespoke Mortgage Group. Hi Charlene, how are you?
I'm good. How are you?
Doing well, thank you, and welcome to my YouTube channel. How have you been? How's business? We are still in the pandemic. How's it
Doesn't
going?
feel like it. It
Yeah,
doesn't feel like it at all. I'll be honest. It doesn't feel like COVID happened at all.
yeah.
But that's always a good thing for us. So kind of keeping us busy, and we're not missing out on the summer market at all. So it's been great.
Yeah, usually actually in terms of real estate, we see really quiet activity in July and August. Usually July does not surpass our spring market. The reason being that, a lot of families are on vacation, people are taking time off, especially with kids out of school and all of that. But we didn't see that this July, obviously. With things going into phase 2 and phase 3 of reopening, people are traveling, but a lot less. And so they're at home, and all this pent up demand from buying and for selling, that's all coming out. So we've had a super active summer so far, you'd say, right?
Yeah, it's been pretty active, I'd say. Yeah, so it's
Yeah,
been amazing.
for
No
sure.
complaints.
Absolutely. Now, some of the buyers that I have, especially that are looking to purchase investment property, ask me the question about purchasing a property under a corporation name. So I wanted to chat with you a little bit about that. Can someone buy property in Ontario under a corporation?
Yeah. So they can buy under a corporation. And I'm sure, like the reason people do that is, like you said, investment properties, right? So they want to be able to save as much as possible. Just because obviously the investment route is the best route. It's going to make you a ton of money by building equity because your tenant's paying down that mortgage. But then there's also a lot of tax implications as well. So that's one of the reasons people do that. So yeah, you can definitely do that.
So in terms of the qualification of a mortgage,
Yeah.
so basically when you're buying under a corporation, when I as your realtor am putting in the offer for this buyer, instead of putting it on their names, I'm putting it on their company name. So when we forward that agreement of purchase and sale between the company as the buyer and whatever seller, when we send that to you, how do you actually do the deal with the corporation as a buyer?
So basically what we would do is we would be pulling the actual credit bureaus of the people that are under the corporation and using them. And there are, even though they can buy under a corporation, there are some lenders that will still require you to have some sort of like a personal liability on there. So you will still have to go on yourself as well. And so we would obviously be getting the information of the shareholders under the corporation. But yeah, we would using their own details.
Okay, so basically the buyer name is now the corporation, but the qualification for the mortgage still happens on the owners of the corporation, their names.
Exactly.
Okay.
Exactly. Yeah.
And do you know, would they be signing, would the buyers be signing as a guarantor for the corporation, or are they co-signers, like co-applicants?
So they would be signing as a guarantor.
Okay. Okay.
It
So
differs from lender to lender, so I don't know into that. But for the most part, guarantors, yeah.
Okay, got it. Now, in terms of the corporation, does it have to be a corporation that's already in operation? Or let's say if I wanted to go out now in the next 30 days, purchase a property, can they open a corporation today? Would a lender lend in that sort of scenario?
Yeah. There's some lenders that will still allow you, like even if it's a new corporation. So that's not really a deal breaker. So even if you were to go out now and basically, like you said, get your own corporation and then purchase under it to kind of save some money tax wise,
Mm-hmm.
that's something that can be done. Yeah.
Okay. And then under the corporation, as the mortgage agent, what additional documentation would you or the lender ask for?
Yeah, so we'd want to see, the actual corporation, obviously. That would be the main thing. Some lenders will ask for bank statements as well. And some lenders will only allow you to purchase under a holding company. So they would want to see the articles of incorporation, and then they'd want to see income on the side as well. So they'd want to see that you have, like your own income coming in.
Mm-hmm.
Aside from the assets that you have in your holding corporation. So you can only purchase under the holding corporation, but you obviously have to show some sort of separate income aside from your assets.
Okay, now that actually is a great segue into my next question, which was, is there a difference between a holding company and a regular corporation that is already doing business?
Not really. From my understanding, again, I'm not an accountant, but from my understanding, I mean, a holding company is literally what it says it is. So you're just basically holding your assets there, just basically to protect your assets if anything were to happen personally, right? But really, there's not really much of a difference between the two.
Okay, so for the sake of mortgage qualification, it's all the same whether they're using a holding company or if it's an operating company or whatever it may be. From the qualification side, it's all pretty much the same.
Yeah. It's just some lenders have different guidelines. Some lenders will only do it under a holding company.
Yeah.
Some lenders will only do it under a corporate, well, not only under a corporation, but some lenders will allow corporations as well. So.
Okay. And then what about if somebody's purchasing under a company, is it true that they're going to have to go on the B side or go to, private lending, or would one of the top tier banks also lend to them?
Yeah, one of the top tier banks would lend to them. We actually personally have a contact that will allow like best rates. So usually, if we are going through like some of the lenders that we've used in the past, rates could be anywhere like maybe 3.5. But there's some lenders there's some banks that will actually allow you to purchase under a corporation, but they'll give you best rates. Now, of course, every scenario is a bit different. So the rate is according to whatever the scenario is and that profile of that client. But I would want to say in the 2%. I don't really want to quote a specific rate, but in the 2%, which is pretty decent. So.
Yeah. In general, like we're seeing super low interest rates in the market right now, and we're anticipating that they're going to remain this way for some time at least. Now, in the market, is there a difference at any given point in time for a rate that's offered to an investor, whether they're buying in their own name or corporate name, and the rate that's offered to, let's say, a first-time home buyer?
Yes. So I'm sure you may have heard about this, but there's always a rental surplus. So of course, if you're looking to rent out the whole property, there's usually rental surplus, especially at the banks and the lenders as well. So if you are looking to now live upstairs or downstairs and rent the other unit, obviously that would technically be now owner occupied and rented. So you wouldn't be taking on that surplus in terms of the rate. So yeah, that's something that people do sometimes.
Okay. And if the buyer is purchasing under a corporate name, are they looking at another sort of surplus on the interest rate, or would it just be, the one that's offered to investors?
So usually, like I said, in the past, we've had lenders that will offer like 3.5 or in the 3% for a rate if you are an investor and you're purchasing under a corporation. But we have a contact that's able to allow best rates. So it's in the 2% right now. So they would basically be getting almost an owner occupied rate pretty much.
Okay, that's fantastic. And that's it does. Yeah, it definitely does. Because that's a question that people have, right? Whether you're purchasing under a corporation or for yourself, or it's an investment, or you're going to live in it. People have the question about what rate am I going to get? And my answer has to be that, it depends. So it depends on a number of factors, but it is a question that people have. In your opinion, do you think that purchasing under a corporation name is easier or more difficult compared to purchasing an investment property under a person's name?
So I would say easy answer would be it's easier, right? But then at the end of the day, every scenario is so different. So it depends on how many properties you have. It depends on your specific scenario. So I would recommend that you speak with an accountant to figure out what your best option is, right? But I mean, for the most part, purchasing in a corporation is going to save you a lot in terms of capital gains and tax, right? So.
Absolutely. And now if someone wanted to move forward and go ahead and purchase an investment property investment property or not, I always advise my buyers to get a pre-approval. If they're purchasing under a corporation, are you also able to do a pre-approval, and would you recommend that?
So I can run numbers for them if they're purchasing under a corporation, but and that way they can kind of have an idea of what's actually going to what they're going to qualify for. But to be honest, it would just be something that I would submit once they actually have a live file, and we can kind of submit it then once they have their corporation and everything set up. But in terms of running numbers and doing like a rough pre-approval, yeah, that's definitely something I can do.
Awesome.
Yeah.
Great. Well, thank you, Charlene, for being on the video. This is a new topic. You know, a lot of first-time investors or multiple-time investors. This is something that they often want to look into, purchasing under a corporate name, obviously to save tax and whatnot. Although we can't speak to the taxation law, we can kind of give an idea of how to go about it, and then obviously refer them to their accountants for further information. So thank you for sharing your knowledge.
Thank you. Thank you for having me. I appreciate it. And I'm like, that was a really great discussion. So I'm glad we got to chat.
For sure, for sure. And if any of our viewers have any questions about purchasing, if it's a real estate side or if it's a mortgage approval side, definitely reach out to both of us. I will put Charlene's social media links and website down below so you can connect with her. And thank you everyone for watching. We will see you on the next video.
Thank you for having me.
Take care.